What's up, guys? In this video, I'm going to break down the fundamental factors driving gold and GBPJPY recently, as well as some technical analysis and trade ideas for the high impact news on the economic calendar for the upcoming week. Starting with gold, the three main topics that are moving gold right now are US interest rates and the data supporting the decisions, the current wars, mainly Russia, Ukraine, and Trump's new tariffs. Gold first started pushing into the 2800s in early February 2025 when Trump first announced the tariffs on Canada and Mexico. There was some profit taken around 2950s before the push up into the 3100s. So we had this push up all the way into the 3100s. At the beginning of April, when Trump announced his sweeping 10% universal tariffs, there was a global equity sell-off and more profit taken at the new highs around 3160. That's the sell-off here. The next push up into the 3100s for gold came on the 9th of April when the US implemented the 104% tariffs on Chinese imports. The uncertainty in the markets drove investors into gold, pushing it up to 3,500 over the next 9 trading days. Then on the 2nd of April here, there was a sharp sell-off due to a suggestion of a de-escalation in the US-China trade tensions from the US Treasury Secretary Scott Bessent. This triggered a risk-on sentiment where gold dropped over 2,000 pips from 3,500 down to 3,261 the next day. On the 5th of May, Trump announced a new 100% tariff on foreign-made movies, which again pushed gold up from here at 32.38. Back to the resistance at 34.35. Gold pulled back again from this level due to FOMC and the markets expecting no immediate rate cuts, which was bearish for gold. Gold continued down with another 1,000 pip day here on the 12th of May from a 90-day US-China tariff truce. Gold dipped below 3,200, forming support around 3176. The bullish push back into the 3,300 started here on May the 15th. This candle right here. The key drivers were softer US economic data, so US PPI dropped in April, and retail sales growth slowed more than expected. This weakened the US dollar and supported gold. Also, Putin skipped peace talks in Turkey, which reduced hopes of a quick Ukraine peace deal, prompting safe haven flows into gold. Gold has been trading within a tight 1,000 pip range recently from 32.88 to around 33.80. On 5th of June, last Thursday, we had a rejection from 3,400 due to weak services PMI and ADP. The data wasn't soft enough to boost expectations for a Fed rate cut. Two of the reasons the Feds are not reducing interest rates yet is because inflation is still above the 2% target and the US labor market is still strong. On Friday, we had NFP numbers come out at 139K, which was above the 126K forecast. Earnings also grew month over month, and unemployment rate stayed at 4.2%. This was subsequently bullish for USD, but bearish for gold. Cutting rates means the Feds intend to stimulate growth in the economy. A strong labor market, low unemployment, and rising wages keep demand high and can fuel inflation. US CPI, the year-over-year forecast is 2.5%. If CPI comes out higher than 2.5% or hot, gold will sell, as the reading would suggest that there are persistent inflationary pressures, potentially prompting the Feds to maintain the high interest rates. If CPI comes out lower than 2.5% or cool, gold will be a buy. Easing inflation increases the likelihood of the Feds cutting interest rates, which will reduce the opportunity cost of holding gold and boost its appeal, driving prices higher. If CPI meets expectations, 2.5 as expected, then we might see a gold whipsaw and trade in within a range until we get more information. Also, US-China trade talks are supposed to be resuming. If there's progress, that'll be bearish for gold. But if the talks are stalled, then that would be bullish for gold. Looking at gold technically, we have some significant highs and lows on the daily time frame. There's a strong resistance around 34.34, 34.35, and a low in the structure around 31.76. Technically, gold is still bullish. If gold breaks below 32.87, then I'm looking for sells down to the next daily support at 31.76. Alternatively, gold can create a higher low anywhere in between this point to continue back up. If gold can hold above 32.87, then I'm looking for uptrend structure to continue and a retest of 34.35 after 33.80 resistance is broken. On to GBPJPY. So pound yen is currently influenced by the Bank of Japan's monetary tightening policy, ending stimulus and hiking rates cautiously, and Bank of England's expectations based on economic indicators. Pound yen has been maintaining bullish structure starting from the support formed on the 9th of April. On the 1st of May, pound yen rose over 200 pips after the Bank of Japan unexpectedly cut its inflation and growth forecast due to the impact of US trade tariffs on the global economy and kept its interest rate unchanged at 0.5%. This sparked a yen sell-off. Another notable push was on the 12th of May, triggered by the US-China tariff relief news that started a risk-on surge across the markets due to renewed optimism. As investors shifted into risk assets, the yen sharply weakened, pushing GJ higher. Technically, there's a strong resistance level at 196 for pound yen, as you can see from the two sharp sell-offs here and here. The first sell-off on the 14th of May was due to a shift in risk aversion from trade tensions and fading optimism from the US-China talks, strong Japan PPI, and hawkish remarks from Bank of Japan officials about the Japanese policy tightening and a cautious Bank of England after better than expected Q1 GDP. The second sell-off on the 29th of May here was due to profit taking at 196 and a weak demand at the 40-year Japanese government bond auction, which sent the yields to decade highs. This week, GBP will be focusing on UK jobs on Tuesday and GDP on Thursday. Strength in claimant reduction or wage growth may reinforce the Bank of England's hawkish expectations, strengthening the pound, which will be bullish for GJ. Weak prints could dial down rate pricing, causing downward pressure for GJ. Solid GBP on Thursday would support the pound and lift GJ, whereas a weak print could trigger a risk off in the pound and be bearish for GJ. Technically, GJ has remained bullish with the first significant higher low at 192.6. If GJ sells below this support, then I'm looking for a further pullback to 190.3. If pound yen breaks above 196, then the next area of interest is around 197.3, then 198.7, which is a weekly resistance. That's all for this week's analysis and fundamentals. There'll be specific breakdown for each news daily during the live streams and some trade ideas to go with it as per usual. Good luck with this week.